Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today in the under consignment account, ledger account. In the previous video, we have understood the concepts of consignment account and the treatments under the journal entries in the consignment account in the books of consignor also and consignee also. Now, let us understand the ledger accounts in the books of the consignor. In the books of the consignor, totally we are preparing 4 ledger account. That is consignment account, goods sent on consignment account, consignment stock account, consignees account. These are the account which we are preparing under the consignor, books of consignor. Okay, let us understand first. First account which we are preparing is consignment account. Consignment account is prepared for each consignment separately. If you sent for the same consignee again and again also, we are preparing consignment account separately each time. And with this account we are preparing to find out the profit or loss. In the consignee account, there will be two sides, debit side and credit side. In the debit side, we are recording opening stock with the consignee, goods sent to the consignee, expenses of consignor and consignee, commission paid to the consignee. If in case profit, that will be recorded under the debit side. In credit side, we are recording abnormal loss returned by consignee, sales made by consignee, closing stock with the consignee. In case of loss, we are recording in the credit side. The balance amount will be recorded, and profit or loss on the consignment will be transferred to the profit and loss account. Let us prepare consignment account. Consignment account. Here, debit side and credit side. Whatever expenses to the consignor, those expenses will be recorded in the debit side and incomes will be recorded in the credit side. Opening stock to stock on consignment, that is opening stock with the consignee, that will be recorded in the debit side. Then next, goods sent on consignment. Goods sent on consignment. Goods sent on consignment, which are sent by consignor to consignee, that we are recording. And any expenses paid will be debited to the cash or bank account. Expenses paid. If expenses paid by consignee, then to consignee account, because the consignor will return the expenses paid by consignee later. That is why it is an expense to the consignor. That is why we are debiting the consignee's account, which whatever expenses paid. Expenses paid by the consignor will be debited to cash or bank account. Expenses paid by the consignee will be debited to consignee's account. Then, if any commission paid to consignee will be debited to consignee's account. Consignee account. This is the commission. Debit side we are recording opening stock with the consignee, then goods sent by the consignor, then any expenses paid by the consignor, then expenses paid by the consignee, then commission paid to consignee by consignor, that will be debited. Then in sales made by consignee will be credited. Consignee's account. Consignee's account. This is sales. Sales we are crediting, and goods, any goods returned by the consignee will be recorded credit side by goods sent on consignment. This is returned. consignment account returned by consignee. Then, if in case any abnormal loss, normal loss we are not recording. Only the abnormal loss we are recording. That is abnormal loss. Loss account. Then, by consignee's account, goods used by the consignee. Then, by stock on consignment account, that is closing stock or unsold stock, value of unsold stock. So these are the account we are crediting to the consignment account. Now profit and loss account, in case any bad debt is there, that also we are debiting bad debt. In case of loss, profit or loss account, this is loss balancing figure. In case of profit, we are debiting to profit and loss account, we are transferring loss account, balancing figure, profit. This is about the ledger account of the consignment account. This is very easy, like how you are preparing your trading account, like that only. But here we are taking the expenses. Those are the direct expenses only. Non-recurring expenses and recurring expenses are the indirect expenses. Okay. Yes, let us prepare now the next ledger account, that is goods sent on consignment account. Second account in the books of consignor, goods sent on consignment account. In the goods sent on consignment account, we are preparing to show the goods which we have sent to the consigned, to the consignor, and the goods returned by the consignee. Whatever sent by consignor and whatever returned by consignee. To know that, and balance in the sold by the consignee, and considered the sales, whatever the balance remains, no, will be considered as a sales and transferred to the trading account. Here you can see in the consignment account we have debited consignment goods sent on consignment account. So in the goods sent on consignment account, we are crediting. This is the goods sent by consignor to the consignee. Whatever goods sent, that one we are crediting by consignment account. By consignment account. Okay, understood. Here we have debited goods sent on consignment account. In goods sent on consignment account, we are crediting consignment account. This is the entry for the goods sent by consignor to the consignee. Then next we have recorded goods sent on consignment account. We have credited. This is the goods returned by the consignee to the consignor. For this we are debiting to consignment account. Consignment account. Now the balance will be transferred to, considered as a sales and transferred to the trading account. Transfer made. This is about the goods sent on consignment account. right? Only two entries will come. The goods sent by consignor and goods returned by consignee, and balance will be transferred to the trading account. It will be considered as a sales. After goods sent on consignment account, we are preparing consignment stock account. Consignment stock account is prepared to know the opening value and closing value of stocks which remains with the consignee, and same will be transferred to the consignment account. In the consignment account, if you have seen, we have recorded two stock on consignment. See this consignment stock account. This is opening stock. Buy stock on consignment account. This is closing stock. So we are transferring these two entries to the consignment stock account to know the opening balance and closing balance of stocks which remains with the consignee. Understand the account. Don't by heart. It is very easy. If you by heart, you will make mistakes. Consignment stock account. First, we are recording the opening balance to balance brought down. To balance brought down. This is the stock in the beginning. In beginning by consignment account. Consignment account. This is the opening stock. Opening stock. If you see here, we have debited stock on consignment account. This is opening stock. So we are crediting consignment account in consignment stock account. Okay. Then closing stock to consignment account. Value of closing stock. Value of closing stock, and balance by balance carried on. This will be stock at the end. Stock at the end. This is about the consignment stock account. Okay, here we are recording by opening balance, closing balance, that is opening stock, closing stock, and stock at the beginning, beginning balance, then closing balance. Okay. Yes. The next last account which we are preparing under in the books of consignor is consignee account. Consignee account we are preparing. This is the last account. 4 ledger accounts we are preparing. The last account is consignee account. In the consignee account, we are debiting any balance is there from the previous consignment, that will be debited to balance brought down. If you see consignment account, here consignee's account we have debited for the expenses. So this we are crediting here the consignment account. Consignment account. Expenses. Expenses, because one more entry we have, that is again we have debited consignee's account for commission in consignment account. So in consignee account we are crediting consignment account. Consignment account for commission. The next we have consignee's account here for sale proceeds. Consignee's account for sales. Here we have credited consignee account. So here we are debiting consignment account to consignment account. Consignment account sale proceeds, sales amount. Then we have goods sent by the consignee, consignee's account, that is to consignment account. Goods which are used by the consignee, here you can see. Yes. The next is any advance if the consignor received, then that we are crediting by bank or bills receivable account. Bills receivable account. Then the balance due will be transferred to bank account. Bank account balance due to consignee. Due to consignee. This is about the consignee account. So we have understood 4 ledger accounts under the books of consignor. Let us understand only one ledger account we are preparing in the books of consignee. Let us understand that now. Consignor's account. This is the book account we are preparing under the books of consignee. Here, consignor account we are preparing to understand the commission which received in advance or receivable, bills received or bills payable, and any balances due, that will be understood, and sales made which will be recorded in the debit and credit side of the consignor's account. First we are debiting any advances received cash, bank or bills payable. For the consignor it is payable. For the consignee it is receivable. So bills payable account in advance paid. In advance will be debited. Then consignee balance, any expenses paid, bank account, we are debiting to bank account expenses paid by the consignee. Consignee's expenses. Then commission, to commission due. Commission due. Then cash or whatever received, it is an income to the consignor. Cash or bank, through bank he received. Sales made by the consignee. Then balance carried on. Balance due from consignor. Due from consignor. This is about the consignor account. Balance carried down in case balance due to consignee. Due to consignor. Due to consignor. In case of balance due from consignor, we are crediting. In case of balance due to consignor, we are debiting to balance carried out. This is about the consignor's account. Only one account which we are preparing. Now, let us solve one question, simple question on commission. Now, there was a consignor and consignee sent goods costing 2,50,000. 2,50,000. Consignment basis he has sent. Mr. A sent to B on consignment basis B sold goods for rupees 3 lakh. He sold goods for 3 lakh and he has entitled for an ordinary commission. Ordinary commission at 10%. Now we need to calculate the commission payable to Mr. B. Sent goods costing 2 lakh 50, sold goods for 3 lakh. The consignee sold goods for 3 lakh and he was entitled for the ordinary commission and rate of commission at 10%. Now commission will be payable always on sales, not on the cost. Remember this, always on sales we are paying, not on the cost. So the formula is commission is equals to sales into rate by 100. Rate by 100. What is our sales? It cost was 2 lakh 50 but sales was 3 lakh. On sales we are paying commission. So sales is 3 lakh. 3 lakh into 10 by 100. The commission will be 30,000. Right? Commission is 30,000. Let us solve one more question. We'll solve simple questions first for your understanding. Then we will go to the difficult questions, that is complex questions. Now, A sent goods costing 5 lakh and on consignment basis he has sent, and B sold for 4 lakh. Sold for 4 lakh and goods for cash, sold goods for cash 2 lakh. Goods on credit. Then commission is entitled for B is 10%. Commission is 10%. Here cash sale is 4 lakh, credit sale is 2 lakh. 2 lakh is credit sale. Sold 4 lakh for cash and 2 lakh for credit. Total sales is how much? 6 lakh. What is the cost of the goods? 5 lakh. On which amount we are paying commission? On sales, not on cost. So, total sales first we need to find out. Because here we have cash sale and credit sale. Cash sales plus credit sales is 4 lakh is cash sale and 2 lakh is credit sale. Total sales is 6 lakh. Commission sales into rate by 100. This is formula. 6 lakh is sales, 10% is rate of commission. We are assuming because only entitled to commission is given, so it is ordinary commission into 10 by 100 is 60,000. What is the commission amount? It is 60,000. Now, one more question let us solve. The next question is, here A sent 2000 packets. 2000 packets of product and the product was at rupees 1250. 1250 per packet. For the consignment basis. And The B sold 1000 packets. Sold 1000 packets and E sold at rupees 750 per packet. 1000 packets at 1500 per packet and 750 packets at rupees 1600 per packet. This on credit. So this will be on sales. 1000 packets at rupees 1500 per packet, that will be on cash basis. 750 packets at rupees 1600 per packet on credit basis. And he has entitled for a commission at 5%. This is the rate of commission. Now let us find out the sales. Cash sale is 1000 packets into 1500 is 15 lakh. Then credit sale we have. Credit sales 750 packets at rupees 1600 per packet. It is 12 lakh. Total 27 lakh. Total 27 lakh. Commission is on total sales. Sales is 27 lakh. Into rate is 5%. 5 by 100. 27 lakh into 5 by 100 is 1,35,000. 1,35,000 is the commission amount. So we have understood how to calculate ordinary commission. Let us understand how to calculate del creditor commission in case of he opted for a del creditor commission. Now sends goods costing 6 lakh to B on consignment basis. He has made cash sale of 4 lakh. Cash sale of 4 lakh. Credit sale of 3 lakh. And he has entitled for commission at 2% on sales, and this is on sales. 3% on sales as del creditor commission. Del creditor commission. Now first let us find out the total sales, because we want total sales. On total sales only we are calculating. What is total sales? Total sales is equals to cash sale plus credit sale. Cash sale is 4 lakh. Credit sale is 3 lakh. Total sales is 7 lakh. Now commission is 2% plus 3%. Total 5%. 5% is the commission on 7 lakh into 5 by 100. 7 5s are 35. So 35,000 is the commission. Del creditor commission is also calculated on the total sales. Right? Understood? Yes. Let us solve one more question for your understanding. Here he sends goods costing rupees 10 lakh. Costing rupees 10 lakh on consignment basis, and the consignee sold 3/4 of goods for cash. For cash, that is 7,50,000. 3/4 goods on cash basis, that is 7,50,000. And remaining goods are sold. That is 1/4, whatever remaining goods was sold on credit basis 4 lakh. This is on credit basis, and he has entitled for a commission 3% on sales and 3% del creditor commission, and credit sale will be able to recover only 3,90,000. He was sold it, credit sale was 4 lakh, but he was able to recover only 3,90,000 recovered from credit sale. 3,90,000 recovered from credit sale, 3,90,000. Now let us find out. First we want total sales, right? Total sales is equals to 7,50,000 is cash sale plus 4 lakh is credit sale. That will be 11,50,000. 1,50,000. Now commission 3 plus 3, total 6% on 11,50,000 into 6 by 100. That will come 69,000. 69,000 is the commission. Amount transferred to profit and loss account, because amount recovered only 3,90,000. We have balance of amount. That is why here we are showing the amount transferred to the profit and loss account. Total commission minus bad debt. Total commission minus bad debt. Total commission was 69,000, and out of 4 lakh he was able to recover 3,90,000. The remaining 10,000, the balance will be a bad debt. The 10,000 we are minusing. So amount to be transferred 69 minus 10, 59,000. 59,000 will be transferred. And bad debt is, you all know how to calculate bad debt, no? Bad debt is equals to credit sale minus amount recovered. This is the formula for bad debt. Already we have taken 10,000, no? That is, total credit sale is 4 lakh minus 3,90,000, amount recovered, balance was 10,000. This is about the del creditor commission. I hope you all understood. Thank you for watching. Have a great day.